All right, welcome back to this week's breakout watch list from September 11th to the 15th. In this video, I'll be covering the top 10 swing trading setups going from the long side. Each of these stocks either have strong fundamentals, strong technicals, or volume clues that lead up trends. And before we get started, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of these setups. Here are the 10 stocks I'll be covering in today's video. We're going to be going into each of these in detail, so if you want to skip ahead, you can use the timestamps in the comment section below. Now let's jump to MarketSmith, starting with APP. As I was going through my weekend routine, there was one group that was standing out among the rest, and that's the same group as last week, computer software stocks. So we're going to be starting with APP. This is a stock that has been on a monster move this year, going from $9 at the low, I think that was end of December, all the way up to $42.12, what it is now. We've had three gap up on earnings, so serial gapper, that's exactly what you want to see out of a stock that's really starting to appreciate in value. This most recent one happened on August 10th. From there, we pull back into the 8-day, bounce, pull back into the 8-day, bounce, and then get a little bit extended as the market rallied. Had that really nice 6-day rally 2 weeks ago. And as the market pulls back, this pulls back, but it does so on lighter than average volume, showing it's more retail traders just taking shorter profits versus institutions selling into that liquidity. So Friday's action, really tight inside day on the lightest volume in the entire pullback. With this, I'm just looking for a break over Friday's high, 42.62 as a potential entry point, and then getting my stop under Thursday's low, 41.50, call 41.45 for APP. Next, we have BKNG, Booking.com. This is in leisure, travel, and booking, 28th strongest group out of 197. So again, we're always looking for strong groups to improve our probability on the trade. There's another stock in that group, MMYT, that just barely missed on the watch list today, but another name that went from 22 nearly up to 40, basically a double. Not DKNG, BKNG. So this one had a nice launchpad setup on the 10th of July, rallied from there. Some poor action right before earnings, but really nice reaction to earnings. We see earnings were up 97%, sales up 27%, after-tax profit margins up 26%. Really strong fundamentals in this company as it appreciates here. From there, we did have this gap down into the 21 EMA and a lower low here, right around $3,000, but quickly we bounced back up, starting to consolidate around that 8 and 21 EMAs. This is one that I'm just looking for a clean pivot right at 31.60, right around that area, and then getting my stop under the 21 EMA for BKNG. Next we have CLS, and this is a smaller name, $23 and only trades about 1.6 million shares. If this is too thin for you, that's fine. Use the timestamps in the comment section to move on to the next one. But this is one that has been extremely strong lately, going from 10.50 all the way up to, what was the high here? 23.89, so a little bit over a double there. Similar to APP, this is one that's just pulling into the 8-day EMA on lighter than average volume. We got earnings a long ways away, which is nice. We don't have to worry about that. But this is one that as the market was going through that correction, this was pulling into the 8-day EMA and then had one day shaking out, basically when the market turned on that Friday, where we gapped down under the lows of this pullback, shook out that area, still held the 21 EMA, but then closed right near the high of the day. And then we started that move from $20.30 all the way up to $23. So a nice, I want to say that's a 15% move right off the top of my head. But really tight action right around that 8-day EMA. If the market's going to get cooperative, this is a stock that's already been showing relative strength, and we can use really tight stops here to kind of play on that momentum. So just a break over Friday's high, 23.46, a stop under the 8-day EMA. That would be very, very tight risk there. Next, we have the coconut water brand, COCO. This is a stock that if we go on the weekly chart, you can see it IPO'd, let's see, what day was that? October 22nd of 2021, put in a nice IPO base, and then eventually broke through that this year, really riding that 10-week moving average, the red line, up until got extended in the short term, pulled back into that 50-day, and had a little bit of fluctuation there. Now, on this earnings day, there was really, really wild action where it opened up, took out the highs, and then collapsed down only 5% on the day, but it was up, I want to say around 16, 17% at its high. So this type of bar really kind of scares away a lot of traders, and immediately after I'm not trading it, I want to see really tight price consolidation afterwards so I can still manage my risk. But this is something that kind of clears the deck of everyone who wanted to watch COCO, sees this volatility and is like, okay, maybe not one to trade for a little bit, but we do get that move back through the 8, the 21, the 50-day moving average, and then most recently pulls back into the 21 EMA, bounces, very, very tight price action on Friday. We have a pivot here just around Thursday's high, 28.82. Stop loss under the 21 EMA around 27.25. Nice tight risk, and hopefully a stock that once you clear that deck, everyone's going to have to come back into the name when it starts to get going again. So I do like the consolidation here. A little bit more whippy because it is a thinner traded stock, $28, 500,000 shares. So kind of in the same boat as CLS, where if this is too illiquid for you, you skip it, but one that's going to be on my watch list. Next, we have DLO. This one had earnings on the 16th of August, where the stock was up 32% on 1,600% the average daily volume. I want to say that's the highest volume ever, maybe highest volume in a year. Either way, that happened right as the market was kind of going into correction there. We see a pullback to the 8-day EMA, but never a close underneath that, showing great relative strength. And then as that market pressure relieves, so you see the rally in the S&P 500 here, this stock takes off through or above the 8-day through $20, and then closing at a new high for the last, 6 months or so. From there, we consolidate. Had a relatively weaker day on Friday through the 8-day. So instead of trying to buy this on strength, this is one where I want to see if the market comes under more pressure, how this handles the $20 area. If it goes there in one day, that's not ideal. But if we slowly pull into the $20 area as the 21 EMA catches up, there's going to be a really nice spot to manage our risk with 2-3% stop loss, where we can get the stop under the 21 EMA in a name that showed initial power, then showed relative strength and the ability to rally as the market pressure relieves. So we're looking for a little bit of market pressure on this, coming into $20, coming into the 21 EMA, and then seeing where we can manage our risk there. No clean buy area at this point, but something that I want to put on your watch list. And very similar to the DLO setup, we have FN. This is in electric contract manufacturing, 57th strongest group out of 197. So that's a B+ group strength rating. Not the strongest, but still relatively strong. But it does have a 95 earnings per share rating, 94 composite, 94 relative strength rating. So the stock itself, or the company itself, really makes up for that. This is one that had that initial move on earnings, up 32% on 600% the average daily volume, and had a follow through the second day up another 6% as the market pressure was relieving for those 2 days. As the market comes under more pressure, it does pull back to the 8-day, eventually does gap down through the 8-day. And what I'm looking for here is, again, just to pull back to the 21 EMA, see how we can manage our risk there. No real buy point, potentially through the 8-day EMA at 153, but this is a name that I want to give it a little bit more time, but not one that I've seen too many posts on Twitter or X, so wanted to throw this on your radar as well. Now we go back to that computer software theme with FSLY, FSLY. This is a name that I completely messed up trading right after the earnings gap, and then kind of missing out on it during this consolidation right at the 8 and 21 EMAs. So just because I mess up a trade doesn't mean that I throw it off my radar because I'm upset at that stock. It's not what you should be doing. What I should be doing, and what I have been doing, is just tracking the stock, seeing more than average volume come in as the stock rallies. Then as the market comes under pressure later in the week, this consolidates above the 8-day and then eventually does close below it on Friday, down 1.6%. But as you can see, all of this move happened on very light volume. So again, it's not institutions using this rally to sell into. It's more than likely just retailers taking profit in a tougher trading environment as the stock moves from $20 to $24 for a nice 20% move there. So as this consolidates on lower than average volume, we can drill down into a smaller time frame and see just how we might be able to sneak into this name before taking out a previous day's high, before a break into all-time or 52-week highs at $24. You can see on this 15-minute chart, we do consolidate and we have a nice tight area right at $23 where we can manage our risk against the low of the day, $22.63. That's about a 4.5% risk there, and that's how I'll be looking to trade FSLY. Sticking with that computer software theme, we have IOT. I know this was on the watch list last week, and I think the setup is actually improving as it consolidates. Let's go to a weekly chart. You can see a nice IPO base. We rally right up into that turbulence zone, put in a double bottom base where, if we go back to the daily chart, we have our first low, rally, and then the second low undercuts the first low, really shaking out any of the weaker hands. Just in time to rally on earnings, up 13% that day, closing right near the high of the day and the high overall. We do go into a new all-time high last week on the 6th before pulling back on Slightly elevated volume, but not as much volume as the rally most recently. So how this handles $30 along with the 8-day EMA on more market consolidation or market under pressure is the area that I'm going to be watching. This is a name that coming out of an IPO base, I want to be locked in on it. So if I do kind of have to buy a little bit higher and then get stopped out for tighter risk, that is a risk that I'm willing to take to try to get into a name that's breaking out of the IPO base that might have a quick double move from here. Just because I did trade this earlier through the HVC, or not the HVC, but the closing price of earnings day with the expectation that, hey, if the market's under pressure, it's going to stop me out. It did for a 2% loss, but I'm going to keep my eye on this because it's really like a theme. We have computer software theme to work on, and stocks breaking out of IPO bases do have a lot of potential upward volatility. So a couple 2% losses I'll take as long as I have the potential to make more than that, 10%, 20% very quick moves. Next we have POWL. This is an electric power equipment, 58th out of 197. So very similar to FN. The stock itself is very strong, even though the group is just relatively strong, but relative strength rating for the individual stock, 99. Earnings up over 1,000%, sales up 42%, after-tax profit margins up 10%. A serial gapper where gaps up, consolidates, gaps up on earnings again. So if this is one that needs more time, allow that 10-week moving average or the 50-day moving average to catch up. Historically, that's what it's needed before a next move up. So I'm not too worried about trying to trade this for a big move right now. This is more of a swing trade. Try to get in from this tight price action, showing great relative strength, bouncing at the 21 EMA, where I can manage my risk against 80 and the 21 EMA and look to take like relatively quick profits if it runs up into the $90 area for POWL. And finally, we have Tesla, TSLA. I'm sure you've heard of this stock. I'm using this more as a risk on, risk off metric for the market because it's done a great job doing so. When it's a gap down on earnings through the 8 and 21 EMA on above average volume, that was the big risk off signal to the market. I think that might have been the day, is that the day the market topped? Maybe the NASDAQ topped that day. But that was your signal, hey, you need to be taking some profits off the table, look to be a little bit more defensive. We've rallied for a couple months on end without a true consolidation. So that was a great warning sign to, hey, let's take a step back and get a little bit defensive. From there, we have a bear flag into the 50-day, eventually fail through that. And then we bounce, if you look to the left, just at a previous resistance area. Once you break above it, potential for support there. It got extended into that gap down, and then you have an island gap where we gap down, gap up, and then we rally in the 8-21 EMAs, consolidate there, push through to the 50-day, and now we're consolidating between the 8 and 21 EMAs below current price, the 50-day, which has been a great resistance point overhead. So if we can break and close above the 50-day, and I'm not talking like just above like we saw on the 31st of August, but a true break and close above the 50-day, that's going to be my signal to say, hey, it's a risk on market again. I can size up my trades, look for larger moves, not look to sell immediately into strength, but really try to make larger gains on the risk. So with Tesla, that's the area that I would also be buying a move through the 50-day moving average, or potentially if we gap down through the lows of this pullback and then recapture that area. So that would be 242.01. Say we gap below that for some reason and then reclaim it. An oops reversal is another great way to get into this name where you can manage your risk much tighter than just buying at the 50-day. Then you got to give it all the lows of the pullback for Tesla. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video, and I'll see you in the next one.